Uh-oh, could we be heading for a big rug pulling by Jerome Powell? Markets here are nervy as we are just about 24 hours away from a Jerome Powell speech at the Jackson Hole Symposium. This is a meeting of Fed officials where we will get clues about what the Fed are projecting for the next 12 months, which of course we know coincides with what we hope to be the start of our interest rate cutting cycle. The problem is there's been some scary jobs data which I don't think this market is correctly understanding. Of course, Bitcoin has shown a little bit of strength here over the last couple of days. I'm going to talk about that as well, but we need to kick off with the data that the market is not talking about. If you appreciate this type of updates, guys, make sure you smash up the likes and do not forget to subscribe. Let's start off with the obvious fact that this market in 3 weeks' time is expecting at least one rate cut. And even more than a quarter of the market now is actually saying, hey, Jerome Powell, go ahead and give us a double rate hike because you're behind the curve. And in past videos over the last couple of days, we've spoken about the fact that this is a bit of a double-edged sword, right? If Jerome Powell does a double rate hike, you may think that the market will be excited because he's loosening policy quicker. But the problem is this will give the cue to the market that Jerome Powell is actually behind the curve, and that could stoke fears in the market as well. Now, to add to that, since this period of time, we've looked at CPI, we've looked at PPI, we've looked at some of the jobs data, and it's come in showing strong economic picture. Remember, a couple of weeks ago, we were worried that are we being triggered into a recession, right? But the retail data has come in strong, inflation's continued to call, company earnings have been okay to an extent, and that's helped markets quell some fears. But yesterday, we've got something which went under the radar a little bit, and that is the US jobs report revisions. So this is really important to understand. Every time we get a non-farm payroll figure, we get a reading. But what happens thereafter, after a period of time, is you get a revision. Now, we've just had a revision on the US economic data. The new estimate suggests monthly job growth of around 174,000 instead of the 240 previously understood. Now, what does that mean? That means less jobs were created than we were led to believe. Now, I'm not going to get into all the kind of political controversies that this may, entail, the fact that we're heading into election year and certain parties will obviously want to make the jobs figures look good as well as the inflation figures. But as far as we're concerned, we were led to believe there's a certain number of jobs being created. And in fact, on their revision, they revised it by 818,000, guys. Let that sink in. Hold up. Do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit. So you could learn to become a profitable trader. Check it out. Link is in the description. Almost 1 million fewer jobs than expected over the last 12-month period. That's a 30% revision. This is not about making a small mistake and revising by 5%, okay, even 10%. A 30% revision to the jobs figure. That is the biggest such revision we've seen since 2009, guys. 2009, we're talking 15 years. And it's obviously happened during an election year as well. Now, this, of course, is going to start causing some rumors to go around about, how is the economy actually doing? All this time, we've been kind of gaslighted into thinking, oh, look, good jobs figure. Oh, look, good jobs data. Oh, look, good jobs data. Only at the end to say, we lied to you by about, 50, 60,000 every single month. New jobs, we lied to you to that extent, 30%. I mean, it's going to cause some problems. And so the question now comes, what is Jerome Powell going to do? What is the actual health of this market? And what is he going to do? Is he going to panic and give us a double rate cut, which the market's not going to like, guys? You may get a temporary pump, but I think the market's going to be worried if he does a double rate cut. They're going to be like, hang on, what's going on here? What have you seen in the data that's making you panic, Jerome Powell? You're the one that was all calm this time. Why are you suddenly doing a 50 base point rate cut? So we're going to need one rate cut. And the question is that going to be enough? Right? Is that one rate cut going to be enough to keep the economy together and not drive us plummeting into a recession? This is what the market is currently worried about, okay? So when you jump on over to the markets, let's take a quick check-in on the US markets. You can see in the pre-market here, US just kind of hovering, right? And I wouldn't expect any less. 24 hours before a Jackson Hole symposium speech by Jerome Powell, this market is waiting on direction. Now, we have seen a bit of a pump from Bitcoin, right? You've been as low here on this candle a couple of days ago on the 15th of August. Just a week ago, we hit 56.1K. And today, we've hit as high as 61.4. So we are trying our best here on Bitcoin to grind out a higher low. Now, a higher low is a little bit silly if we don't get a higher high, right? And ultimately, that's what we've suffered with. You've had this high, lower high, lower high, lower high, and lower lows, right? And so we've been trending downwards in this consolidation pattern. In order for us to gain any strength, we've got to get above this important resistance level. Don't expect it to be easy. We could easily get rejected here, right? It's very important we get above this 63.5 to 64,000 level, hold some support, and then try get a higher high. And it's when we get this higher high, when we break past this level here by this wicking candle, this one right here, right? When we break eventually past that, expect the shorts to get wrecked. That's where the shorts are going to get wrecked, and that's where we should see some good impetus in this market. But in order for this scenario to play out, we're going to need the dollar index to continue to show more downside. So far, it's been very good, right? We've broken down from the triangle here that I shared with you guys, and this is always a good sign. But look, it's got some support here, right? Dollar index is going to want to do this. We can't have that happen. We can't have bad economic data drive fears that allow the dollar index to bounce. Because if the dollar index bounces and the US dollar gets relatively stronger, crypto will struggle, Bitcoin will struggle, and your altcoins will struggle. So it's really important that data comes in line. Jerome Powell shows us signs that he's going to cut in September and doesn't give us the opposite picture tomorrow. He doesn't come out hawkish. He doesn't come out aggressive. And that should hopefully allow us to trigger this dollar index to the downside further, allowing us to avoid this situation, and the downward situation for dollar index should allow us to get some impetus to the upside. That is fundamentally what we need. Of course, it's going to come down to Jerome Powell. It's going to come down to the real data that he's seeing, because as this is just shockingly kind of revealed, we don't get the real data. We get what they want to share with us, right? They take us along like puppies saying, oh, look, here's the data, when we never actually have the real reading. Jerome Powell will have the real reading. He'll have his mandate from Biden and Kamala or whoever else is running the White House at the moment to say, do this in an election year. So we've got to weigh all of that up as investors, but start looking at some of the macro factors, right? Start looking at things like this, which remind you that Bitcoin always does this, always struggles for the first, second, and third quarter of a bull run, and then finally starts to really kick into gear. I'm not leaving. Like I said in my tweet, I am not leaving this market. I'm not going to be shaken out when I've seen things like this happen in the past. Also, take a look at this. Bitcoin, when it was within the 9,000 to 10,000 range, spent 167 days in that range. That's over half a year, guys. That's painful. And so now that we've been stuck in this range here for a while, I know it's frustrating. I know it's annoying when Bitcoin has been consolidating for many, many weeks. I mean, pretty much since this candle here on the 4th of March, we've spent, the mid part of this year just consolidating. But remember, remind yourself, these big consolidations set you up for big moves. And ultimately, that's what you want for Bitcoin. The fact that it's spent this time consolidating here is actually good news. Right? It reaffirms the price. Remember, when we ran up to 64, we didn't spend much time at 64. We came back down, hit 29. Then we ran up to highs of 69. We didn't spend much time there. Blow off top, straight back down to 15,005. We've spent a lot of time at high prices here. This should give you confidence that Bitcoin is creating a floor. People are buying Bitcoin at this level. Hodlers are buying. Institutions are buying through the ETFs as well. We're seeing decent inflows. So this should give you some confidence as well that, look, we're creating a new floor. We're creating a new normal, a comfort level for Bitcoin. And that should stand us in good stead. One more thing before I tap out for this episode, guys, is bring out the EMA ribbon. The trusted EMA ribbon, which reminds you that, look, we're just consolidating. Yes, we had a bit of a panic attack here, due to the the Japanese yen carry trade collapsing and that starting to unwind. Got a bit of a panic there. But ultimately, a nice consolidation into the EMA ribbon. And what has history shown us? The EMA ribbon acts as support. It's a nice area to buy from. And these ultimately are the areas I want to be buying from. I don't want to be buying extended up here. No. I mean, if we just move this chart over here, when the chart looks like this, look at that when that green candle printed just here. I don't want to buy there. Look, I extended the line for the EMA ribbon. Patience, 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 patience. Now I like it. right? And then hopefully when you start bouncing up here, that's not when I want to be buying. I want to be buying from positions of strength, okay? So that's my modus operandi right now. So there you have it, guys. Hopefully, Jerome Powell comes out sensible tomorrow. Hopefully comes out saying, look, just telegraph that September rate cut. That's what the market's expecting. Give it to us. Don't say anything more. Don't say anything less. Just keep it going like you did in the last FOMC meeting so that the market can expect a rate cut in September. That's all we're asking for, Jerome Powell. Don't mess it up. Hope you enjoyed this video, guys. Don't forget to smash the likes. And don't forget to subscribe. And I'll see you in the next one.